Yo, when you check your screen, you know what time it is, right? It is Forex trade time. You know who I am already. And of course, after so many years of trading the financial market and mentoring successful mentees, I decided to come off on social media and I decided to start up my YouTube channel officially. Yes, this is the first time you'll be seeing me. It wouldn't be the last time. So subscribe to my channel, turn on your notification bell so you get to be notified when I drop a content. Okay, so I want to talk about one of those things a forex trader needs to know to become so much profitable in the forex market. I mean, one of those things you need to know as your foundation for you to get solidified, for you to understand the market charts effectively. And of course, this is not the beginner's guideline. This is not the beginner's educational content. This is more like advanced intermediate, right? Synonymously. Okay. If you want the beginner's course, right, come into my DM, write me. I'm going to give you Profitable Traders Hub Beginners Guide for free. And there's a guide that you could just go through for 24 hours. And yes, you are good to go. Then you come off to this very intermediate level. So market structure cannot be overemphasized. If you want to be successful as a forex trader, you need to know market structure. So you get to see charts, you get to see lines, you get to see a lot, and you ask yourself, what are these candles all about? I'm seeing this, I'm seeing that. What does this signify? I'm here to make it very simple for you. Of course, you know how we do it, right? We keep it so simple, yet knowing a lot. Um, right now, we have three types of markets based on their trend. We have an uptrend, which is a buy market. We have a downtrend, which is a sell market. Then we have a ranging market, which is a kind of market where the seller nor the buyer are in charge, right? In other words, it's a kind of market we call consolidation market. Now, an uptrend in another word, we call it the bullish what run, or we call it what the long market. The downtrend is a bearish run, or we call it what a short market, right? Those are terminologies we use in forex. I could just wake up and say, hey bro, what's your bias for today? I'm trying to see what is your direction for today. Are you up buying or you're down selling? I could just tell him, bro, I think I want to go short on GU, meaning I want to sell GU. Bro, I think I want to go long on GU, meaning I want to buy GU. So let's see what an uptrend looks like, right? Now we're going to see this. An uptrend firstly has a high, right? Now this level serves as our support, this as our resistance. We expect price to come, pull back, break, then break this previous high, creating what a break of structure, taking out this high, creating a break of structure, then creating a new high. But so what I'm trying to say in essence is when a resistance is broken in an uptrend, it becomes what a support. So in an uptrend, you actually want to see resistances broken. Then this resistance is broken, they become your new what support, where price finds its level to buy from. As simple as that. So like I said earlier, I want to see price create a low, then take out a previous high, creating a higher high, retesting the resistance which has become our support now, right? Then creating a higher low, then another higher high. As simple as that. So this literally is the old high, the first high that was taken. Now this was a second high that was taken or broken, right? So we're going to name this. We're going to name this what this first run is what our high. Then let me put this. Let me make it 10. I think 10 is okay. Then we have this as what our low. Then we have this as what our higher high HH. Then we have this as our what higher low. Then we have this as our what higher high Again, as simple as that. Then this is what our BOS, and our BOS. Of course, this is very simple. This is what the uptrend looks like, and this is what the market structure looks like when it is an uptrend. You want to see series of highs, lows, higher low, and higher highs. Just as simple as it is, right? Now, do not forget, we said when a resistance is broken in an uptrend, it becomes what? A support, where price finds it as a level to what? Go back up to take out the previous high. The same thing here. We had our resistance, and then it becomes our what? Support. And now, of course, most persons looking at what we've said so far, they really want to see price do boom, then boom, take out the previous high, depending on the pullback, if the pullback is valid or invalid. Yes, I'm talking about pullback. We shall talk about pullback very soon, so you understand why this may later become what? Liquidity. Like I said, this is an intermediate class, and of course you can make money off this level if you understand what you are doing. It's as simple as that. So let's look at our downtrend. In our downtrend, which is a selling market, we want to see price do this, create a low, a high, lower low, a lower high, then a lower low. As simple as it is. Now, in a downtrend, unlike the uptrend, resistance broken becomes support. But in a downtrend, what we are interested in is to see the support being broken, right? Back to back. We want to see support broken, boom, isn't it? So this was the protected low, previous protected low, and now this low got broken. And of course, when you see this carefully, you understand that when you visit your chart, you should be able to dictate structures like this. You should not negate the place of structure in trading, else you will not become successful in forex trading. So just as we have said, in a downtrend, you want to see price creating series of low, lower high, lower low, lower high, then lower low. So let's go ahead to name these various characteristics a downtrend mix. This is the low, this is what the high, and this is what the lower low, and this is what the lower high LH. This is what the lower low. And yes, just like the uptrend, one of the similarity is the presence of what? Structure broken. Very simple. BOS. So you should be able to differentiate what? An uptrend and a downtrend, as a case may be. And yes, okay, let me bring this guy a bit. Okay, so we're good to go. Now it's just as simple as it is. Then let's see what a ranging market is. Just like we define a ranging market, we say neither the buyers nor the seller are in charge of the market. So let's see what it is, right? Nobody is in charge. So assuming we have what? A resistance, then we have what? A support level imaginarily, right? So this is what a ranging market looks like. It's neither breaking this resistance nor breaking this support, neither breaking this resistance now breaking this support. It's neither doing any of these two. So you could see price just keeps creating high, low, high, low, high, low. So let's go ahead and name this properties. Then this is what our high, and this is our low. This is our high. This is our low. This is our high, and finally this is our low. Okay, so you could see, and then this is what we call our resistance level, right? Now you can look at your resistance level as your ceiling in your house, and you can look at your support level as the floor in your house. Look at this as the ceiling in your house, and look at this as what? Support. Your floor, the floor in your house. It's as simple as that. Very simple. So even myself making this video right now, I literally have a basement I'm sitting on. This is my couch, one of my favorite couch. I'm currently sitting on this couch, and yes, when I look up, that's my ceiling. You see, nothing from outside can be able to get through me. Why? Because my ceiling is actually protecting me. And then you see my floor that I'm stepping on still serves as my support. It's as simple as that. Okay, let me make a simple analysis, right? This is my hand, isn't it? This is my hand. See this now as what? Your, you could see my hand cannot penetrate. This is what my resistance, isn't it? Price just, my hand is a price, got to my resistance and decide to begin to sell down, isn't it? And then boom, I get to a support level. Just like an uptrend, my hand is resting. I really want to buy. Is on the support. At least I've gathered momentum to go up, right? I'm going up, going up, going up. Then meeting my hand, boom, my hand resists. So it's as simple as that. You see the ceiling in your house. Sorry, there's spelling error here. There is a spelling error here, ceiling. So you could see, or just take the ceiling in your house as your resistance and the floor in your house as a support, or wherever you're sitting on right now, take it as your support. Very simple, and that is all about an uptrend, downtrend, a ranging market. So quickly, I would like to say something again. You see, the ranging market, like the say nominally, you should avoid the ranging market, is not your friend, isn't it? As time goes on, while I keep dropping content, I will show you how to trade the ranging market. I will show you the AMD strategy where price accumulates, manipulate, and distribute. Yes. And also, I could show you where a ranging market like this could be your rectangle reversal pattern or continuation pattern, as the case may be. So you have to get advanced for you to know how this operates, isn't it? There is just one step at a time. So let's also look at the trends. Of course, I tell you the trend you have on your chart is the trend, but then I will create a bias to this. Can I say that not on every case is that the trend is your friend? Yeah, you heard me right. Not on every cases. As we go further, I will show us some false breakouts that happen in the market. While most times you need to pay attention to what you know from your mentorship. Okay, so let's look at some slight example of the uptrend and the downtrend. I have a simple example here, right? Now you could see this is it. Price, first and foremost, you could see price made what a high, created a low. Now let's just go ahead to mark it just like we had it earlier. Price created this high, a low, broke the previous high, created a new high, retraced. Now this retracement now took its basement from what the support, resistance broken, that has become what our new support for price to buy from. As simple as it is, just as I stated earlier, you could see price created a new high, also taking out the previous high, then made another retracement, more like a 60 to 80% retracement, if not 100. Then you could see how literally price took out this previous high, then made a deep retracement, yet not taking out the previous low. Meaning at this point, price did all of this from this level to this level, still serves as our support level in as much as the previous low hasn't been taken. Take this into cognizance, please. As we go further, I'll be showing us what happens here, why the deep retracement, why we didn't have the retracement around this level, just like this very one here. I will be telling us, and boom, we saw price make this. Very simple. And yes, for a downtrend, we'll be looking at a few examples also. Now you could see this is it. Price created from here. Price created a low, made a retracement, created a high, had what? A lower low, right? Now this level becomes our new resistance. Like we said, in a downtrend, we want to see support broken, then we want to see the support become what? Our new resistance, so that price can get its rejection from that same zone. So just like I illustrated with my hand, price began to go up, boom, got rejected. And then we saw how the price also came here to break the previous low that was protected. Very simple, very simple. Then we could see how price made another retracement, boom, to the downside. So this is just as simple as it is. Now for a ranging market, from this level to this level, we could see a lot of activity that happened there. Just like we drew earlier, this serves as our what? It serves as our support. Okay, sorry. And this as our resistance. Price created a high, a low, high, low. You could see price did not break any of this level. Price neither broke this level nor this level. So the resistance got protected here. Support also got protected, not until we had a false breakout. Boom. Very simple. We had a false breakout, and then the first breakout was more of the AMD we're talking about. Accumulation happened here. There was a manipulation to the downside. Price manipulated a lot of persons to the downside. Yes, that was what price did. Initially, it was an uptrend. Anyway, I'm digressing a bit, but I believe some advanced traders understand what I'm saying. It was an uptrend, literally. Why? Because price kept making series of highs, low, higher high, and all of that, isn't it? Now, we saw how that price accumulated. Yes, we have a point of interest here, a fair value gap. A fair value gap. Like I said, I just need to digress for some of the advanced traders. Very simple. The fair value gap here did what? Rejected price. You could see. Yes. Then boom. Even on a higher time frame. Even on a higher time frame, these things happen. At times you could call this, I think ICT call this turtle soup. Yes, some other persons have a model to this, but then this is looking at the AMD strategy from the higher time frame. Because when you talk about the AMD strategy, normally you're talking about the daily candle range theory. We'll come to that and you see what we have been saying. But for now, just keep it cool on knowing what the ranging market looks like. The support, no resistance is neither broken. And yes, this brings us to the end of this section. Do not forget, if you haven't subscribed, subscribe to my channel.
Subscribe.